Fed's preferred inflation measure came in slightly higher in July. It's the PCE, and it rose 0.2% in July, an annual 3.7%. Not good news, though, for the Treasury, which has been trying to lower borrowing costs with bond buybacks. Those efforts and broader concerns have led to a resurgence in the so-called debasement trade. This is where hard assets like gold and Bitcoin get a boost when investors want to hedge against the consequences of high government spending. You can see them both have risen sharply in recent weeks. Bob Diamond is the CEO of Atlas Merchant Capital, joins me from New York. Bob, you are well familiar with the principle of the debasement trade. Over your career, you've seen many occasions where rampant inflation has led to people shifting to gold. I guess Bitcoin is a new wrinkle, in a sense, in the whether or not you think it's a safe haven. But you are seeing a rush to quality.
Yeah, I think, Richard, first of all, it's great to be here with you.
Yeah,
it's been a while. And I think you and I have talked about this over the years. The real underlying issue here that the markets are grappling with, I think, is the debt levels. And, you know, a lot of people have talked about the fact that we've just crossed over 40 trillion in debt. That's up 4 times since the financial crisis. And during that period, the economy has been pretty positive. It's up almost 2 times since COVID. So I think the challenge that we're seeing is really the debt levels and the recognition that 40 trillion is a big number, and you know, the interest payments on that are pretty serious. Okay, and what are we going to do about that?
Right, but as an investor, as somebody who actually lives in the markets and capital, yeah. I mean, this big macro idea of 40 trillion debt and this worry about it, how does that metastasize itself on a daily basis in terms of the decisions that you make of where to deploy capital?
So I think what you're dealing with, Richard, is fundamentally we have a strong economy. We've had inflation above 2% for 5 years now. We have a chairman of the Fed in Chairman Warsh who's been very consistent in saying that getting inflation back to that 2% level or below that 2% level is certainly something that he's very, very focused on. So with a pretty strong economy, really strong earnings, really good financial markets, and of course the boost in investment spending and the income that comes from that with AI, I think what we have to recognize is that rates are going to be here or higher for a while, rather than see I don't see the beginning of a decline in interest rates. So I think that's the biggest factor for people in terms of investment in fixed income.
Do you think this Treasury twist that they tried last week and have said they'll do again, waste of time, waste of money?
I don't think it's going to be. It depends on what the objectives are. And
right.
We've always seen the Treasury recognize the importance of kind of, you know, operating in a way that the off the runs are in line with the on the runs and things like that. So, you know, I think that can be effective. But in terms of will this activity lower the 10-year or lower the 30-year in yield relative to all the other factors that we just talked about, no, I don't think so. And I think the proof is in the pudding so far, right. That there's been really no change or maybe a tick a little bit higher in terms of rates for the 10-year and 30-year.
What part of the investment world at the moment do you like? What's the bit that still gets you excited and that you think, now, really, we need to focus here?
Well, thank you for asking a question like that. And I think, you know, you mentioned Bitcoin, which is, you know, its best version, a right. digital version of gold. But what really focuses our mind in the digital world or the crypto world is blockchain. And probably the single best example of that is Hyperliquid and the exchange that's trading real world assets on chain 24 hours a day, instantaneous settlement, at truly a fraction of the cost and at the speed of the internet. And I think this is having a big impact on, kind of the convergence of what I would call traditional finance or traditional banks and the best of digital or crypto, which is blockchain, and all the unbelievable advantages that are coming from that.
I'm grateful, Bob, and perhaps we'll talk more about blockchain because several years on, and I still don't fully understand exactly its advantages. But that's a discussion for you and I to have on another or over lunch. Good to see you, sir.
We'll do it.
Thank you.